Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 14th, 2019. It is 3:29 p.m. Eastern Time as I'm starting this video, so we have just about half an hour to go. And yes, another video. I know it's probably more efficient for you guys to look at static charts, but I want to cover the FAANG stocks in this video. I'm just going to go over what I call the FAANG stocks, top 5 holdings in QQQ, the NASDAQ 100. That's Facebook, Amazon, Apple, Microsoft, and Alphabet, which has the symbol GOG or GOGL. That's so my acronym is not FANG, it's FAAMG, because the N in Netflix is way down there. Netflix isn't even close to being one of the top components of the top 5 or even 10 components of the NASDAQ 100. So that's what I focus on. I'm going to get this out to you guys for two reasons. I do these videos quite a bit, or sometimes I post static charts given the time. Number one is that there was top 5 holdings in the NASDAQ 100, and there are also many of those are also top components of the SPY or S&P 500. But particularly in the NASDAQ 100, they make up a very large percentage of the total returns because they're so top weighted. They have such a heavy weighting in the index. So if you want to know where the market's going, you only have to know where these 5 stocks are going. These 5 stocks are going to tell you where the market's going because that's where most of the money is, or a lot of the money in the stock market. And the other thing is that I know these are the world's most widely held companies, so therefore the probability is very close to 100% that quite a few of you listen to my voice have money in these stocks or have traded those or have an interest at least in trading them if you don't have a position. So let's dive into the charts so I can try to get it out before the market closes. You probably already seen the other videos I did today. A lot of movement in the market. That's when I'm going to post a lot of analysis, a lot of videos. I've been active in the trading room as well. All right, so the charts, just go through them quick. So Microsoft, we're only going to look at the daily time frames. I'm not going to do the whole big long-term outlook right now. I've done analysis on these in recent weeks or months. They put on my trend lines here, and this is what I have. Microsoft, divergent high back here. That was telegraphed well in advance, 19% drop. Wash, rinse, repeat. Divergent high here. Looks just like that with the setup in this little price channel right here. Towards the end here, we had a price channel, negative divergence, price channel. Broke down, back tested, excuse me. Had a little choppiness, and then boom, before all said and done, 20% drop in Microsoft. This time around, virtually identical pattern. Does it guarantee it plays out that way? Absolutely not. In fact, it scares me a little bit when you have a stock or an index and you have almost 2 identical patterns. It's quote unquote too easy, and the market doesn't like to do easy. But with that being said, let's just take the technicals for what they are right now, and if something else starts to develop, probably take the big headline out of Washington or the Fed or something to reverse this drop today, but we'll see. I wanted to do this video because, again, just like I look at gold and the US dollar and the mining stocks and all that, when I'm factoring in with the broad markets, these guys go into my analysis as well. So I might have QQQ and SPY breaking support or close to it today, but I wanted to make mention. There it is. So here's that trend line that QQQ is testing off the December lows, and it is very, very far from a mere coincidence you have a lot of these other market leading stocks, because again, these guys are QQQ. They make it up. They're not 100% of the returns, but they're enough weighting that they're going to have very similar charts. Not all of them, but a lot of times they're all at support at the same time. That's what I find to be most common. So where am I going with this is, if you want to increase the odds that we're going to drop that other 7% plus and hit that first target on QQQ at least, you're going to need to see this go, just like those levels I showed you in the earlier video today. In fact, this has been the leader. This is the strongest stock within the NASDAQ 100. It is the largest by market cap. It's the only one in the $1 trillion club right now at about 1.1 trillion. Only one not far off new highs, and I think the only one, we'll get to the charts, that hasn't yet failed the breakout. See this little box I did? Remember SPY and QQQ and all the videos I've covered recently on the daily, they broke to new highs, but I suspected and predicted in advance it would be a failed breakout and it would fail. That's the same thing here. These were your previous highs of Microsoft. It tried, finally it broke out, and now it's back testing the breakout. And this is, like I said, this has been the strongest of the group. So if this one breaks, where we've already had the sell signals I was looking for in XLK, the tech sector as a whole, here's a market leader that needs to die before the market die. When I say die, please don't take me wrong. I'm talking right now. Let's just look out near term, potentially another 7% downside, but as I say often, support is support until unless broken. So we are at a pretty important critical juncture right now on both QQQ and Microsoft being at that trendline support. And then Microsoft, even if it breaks the trend line, then has about 130, 50 or so. The recent breakout, the trading range right there. If that goes, you can see my next levels. Not going to give that high a weighting on that purple trend line. Just ignore that. Let's just look at this price support. Next target, if it breaks 123.13 or so, and then maybe down here. The negative divergence tells me it's probably going to break, and that's again why I wouldn't, to me it's just a matter of not if this trend line breaks, but when it breaks. And I don't mean to sound overly confident, because it may not happen. But again, it's odds and statistics. That's how I trade. And I've traded these patterns before, and it's not just Microsoft in a vacuum. It's everything else that's going on. So I don't care how good the fundamentals are right now at Microsoft, what they've got in the pipeline. If the markets break, Microsoft's going down plain and simply due to forced selling. Redemptions from mutual funds, hedge funds, your 401k, short sellers shorting the market, longs pulling their money out, stops being hit, and the same thing that is great for these stocks when there's inflows, money flowing into the stock market, because they are the top holdings in the S&P 500 and the NASDAQ 100, they are a beneficiary. Even sometimes, with not solely based on their fundamentals, they're rising because inflows means when QQQ or any mutual fund that has Microsoft as a top holding, or SPY, when they receive money, they have to then turn around and put that money, buy the components that they hold, and they're going to put the lion's share of that money into these guys, Microsoft. But it works in reverse. So when you get the outflows, it doesn't matter how good. And this is where people, analysts and those that only use fundamental analysis, just can't get a handle on the market. They need to understand supply and demand forces, that during periods of forced selling, and that's where you get the big discounts, the deals. Once a forced selling is over, panic selling, then a lot of these companies have now become cheap once again. So we're not there yet. Watch those levels, set price alerts. If you have alerts on your trading platform, most do. And like I said, that 130.46. And if I set alerts on all of these, what you'll see is they'll probably go off trigger around the same time. So there's Microsoft. Here's Apple. If you're new to the site, just a quick recap, because I did a video on these FAANG stocks the other day. There was that breakout, very comparable to what I just showed you on Microsoft. Breakout to all-time highs. Compared to consolidation, wrong tool. Let me do it again. So there it was, breakout to new highs right here. A period of consolidation where it remained above those highs and tested successfully several times, but it wasn't meant to be. No surprise, I telegraphed it in advance, divergent high back there, and then there was your sell signal when it came. That was the big drop back in last quarter. So that is what Microsoft, I just showed you, Microsoft has yet to do. So I think Apple was just basically, what is that, almost a year behind Apple in such a major top like that. And then Apple, of course, came back. It was very very important support there. Very important support equals very important resistance once broken. So it failed at it once, failed at it again, tried to pop it on the earnings date. Big rosy earnings. This is the same. I've seen this story 100 times in Apple, where they just blow the cover off the ball, but it's no longer about fundamentals. It's now about technicals in the larger market cycle. So look, it's not the death blow to Apple yet. We're still not that far off the all-time highs. I don't mean to be overly dramatic here. I just want to say, until and unless you can clearly take that level out, it's in a bearish technical posture. It failed that level, had a very impulsive selling, rallied back, and it's failed twice there again. Both times it was a pretty impulsive failure. In fact, every time it's come under that level. So that's where we're at. Minor trend line. Okay, levels to watch now. That was then. This is now. This is a very minor but a potential trend line to watch. And then after that, if you ask me what I think is the most important level, right here. right about, yeah, right here, this line 192.72. See a big old gap there, some consolidation, a recent low. So if you break that, that's what you want to look at. That would open the door. We'll move under that to more selling. Whereas right now we're at trendline support. So this is a common theme. I'm showing now the top two components of QQQ. These I'm going in order of market cap. They're both at support right now. So this is where it gets tough, guys. I think we break those supports soon and drop another 7% or so in QQQ. But like I said, unless support's broken, that's why I'm doing this video. So if you want to cover the three options if you're short, I've got a lot of questions in the trading room today. What I do, I'm short, I take profits. You can take profits, or just lower your stops and let it ride and try to swing for the fences. Instead of hitting a single or a double, if that's what you hit today, go for the triple, home run, maybe even a grand slam, which means trail your stops down. I know the tough part to that, of course, is QQQ, unlike futures, QQQ can gap up big against you if overnight, Trump or Jerome Powell or somebody does something to try to gun the markets up. That's always a real risk. But again, I don't trade in fear. If I sat there and always worried about that, I'm going to miss the next correction. The one after that, I'll miss the next bear market. So I've already shared my thoughts on that earlier. Just use keep your don't overdo your position size. Keep your stops tight. So here it is. I'm just looking common theme as I'm doing this video. Here's Amazon. One of the world's largest companies, top component, a very big level. I've had this level back here. It was my first target when I was forecasting a big drop in Amazon off the divergent high there. T1 was hit and T2 zone hit, and it hit my final target almost perfectly. That beautiful doji. And again, these targets were laid out before the stock even broke down. There was your breakdown and sell signal. So here we go again. Watch, rinse, repeat. Overbought down here on the RSI, just like it was back there, plus negative divergence and a trend line break to give you a sell signal, little flagging action, boom, down to a very important support level, I think, a little bit under the 200-day, and that next stop, these targets from before would serve as my same targets once again, 1616 and 1341. I see no reason to modify those. Usually the targets would be a little different. I'm not being lazy. If I thought I needed to move the lines, I would. Alphabet. We'll look at GOGL, Class A shares, trend line support, and price support. I know this chart's as busy as a Christmas tree here, but with all these lines and everything else, but I do see, and I've had this line here for a while, about 1160 or so. Pretty decent price support plus this trend line. So again, not by coincidence, almost so far all of them are right at pretty decent support levels. So it's make or break. We either rally from here or we break those, and then like I said, because of this, I don't think we drop another 1 or 2%. I think we drop, like I said, about 7% or so is my next stop, if you will, where I'd consider closing out swing shorts, especially if we break. If we start to reverse here, maybe I tighten stops, maybe, but right now I'm telling you, I'm planning to hold tight into the close unless I see something very compelling. And 40, 15, 17 minutes to go. I don't think that's going to happen. All right, Facebook just broke trend. There's a trend line off the low. So this is, again, not by coincidence. Here's that same exact trend line I was showing you on SPY, and more importantly, QQQ had held it. Facebook had held it till recently. SPY had broken and back tested. Facebook just cracked it. Maybe a stick save before the close. There's still over 15 minutes to go, but it's down almost 5%. And the more it closes below there, the more likely that breakdown is to stick. However, I'll say this too, and this is what I always do. I trade all these stocks. I take it all into consideration. All goes into my head. What all of these components are doing. What QQQ and SPY. What I mean by that? Okay, I just showed you all the first 3 that I covered before this were all on, had fallen to but not yet broken key support. This one's broken. In a vacuum, I'd say that's a sell signal. I would short Facebook, but I don't live in a vacuum or trade in a vacuum. So until the rest give way, what will likely happen if we bounce, if the rest holds support and the market holds support, QQQ holds those levels, this will prove to be most likely, no guarantees, but most likely a whipsaw signal or failed breakdown. But so far, it's so good, and we're seeing this one break down. And again, the technicals indicate it's a matter of time. and it looks like that time is now. Cisco, they report after the bell. This could move the markets. This is a number about the 6th or so largest, one of the top components, and doesn't have nearly the weighting as the first 5 that I mentioned, but it's up there. Little bear flag action. I mean, this is just, I love this chart. It's stock trades. Look at this. Nice, clean, very steep wedge. Boom. Look at that. Beautiful. And then you set up in this bigger wedge right here. Very well defined. As I talked about earlier, you see that compression there. That's the stock losing momentum as it goes to all-time highs, and and then a breakdown. Clear sell signal, impulsive selling, flagging there. Report tonight, and that could certainly jar the markets. Next support here is 49.07. Again, we'll see what happens after they report. And it did just break support, but this one you have to take with a grain of salt because they report tonight. Any breakdown that occurs a day before or day of a stock reporting earnings, take it with a bit of skepticism. If you ask me, if I had to bet it one way or another, I'd bet it to the downside. I always say this: holding a stock into earnings, in my opinion, is a crapshoot, a gamble. You might as well flip a coin, unless the charts are clearly bullish or clearly bearish. If that is the case, it's been my experience that more often than not, not always, but more often than not, if you have a clearly bearish technical posture on a stock, this is where it's going to go after earnings. Even if it popped tomorrow initially and then they faded it, I would say the next big move is to the downside. I'm not going to bet it. Why bet it? Right now there's volatility in the markets. I can trade the Qs or NQ, be diversified among 100 stocks, so I don't have to worry about a drop in Cisco or a gap against my position, yet I can still make over 3% in a day like today, with the Qs being down that much. Actually, yeah, about 3%. All right, let's say one more. Let me move back to QQQ so my watch list loads. Intel. Talk on Intel. Did I already cover Intel? If not, I don't think I did. Coming up on a trend line right here. You got, well, maybe not. If you're new to the site, you haven't seen my analysis on Intel. Here's my weekly chart. This tells me the big picture. And back here, I was highlighting this wedge. Said when this wedge breaks, Intel is going to fall 24% to my first target, and then ultimately 32 to my second. We went from when I first started posting that, and I said no buy, no sell signals yet. We went up another 2%, then broke down, giving me my sell signal. So it was a drop of 26% total from that date back here whenever I posted that in early 2018. Hit my target to the penny, rallied up, put in another divergent high, hit it again, that same support level, and then most recently I said, we're here with that little minor uptrend line right here. It's not so minor. On the weekly chart it looks minor. That's what we're looking at. And then boom, big red candle. That was your sell signal. So everything I see here, everything I saw back here, and then especially when we put in that second divergent high, tells me that there's a good chance Intel will see that 38.27-ish target in the coming weeks to months here, most likely. Still has to take out that 42.60-ish level. Still work to be done. And again, the markets are at support now, so maybe we could bounce today and tomorrow. If I had to either go long or short this one and throw away the key for the next, let's say 10 or no, it's much more than 10%, 15, 16% move, it would be to the downside. Otherwise, but personally, you can use SOX or SOXX or the 70 ETFs, and then you don't have to worry about any one particular stock moving against you. You get that sector diversification. So that's it. And again, that's one of the top components of the NASDAQ 100. So let me wrap it up here. I'm looking at the clock. This one's probably going to hit you guys right after the mark. Yeah, it takes, unfortunately, I can upload them pretty quick, but YouTube has to process these videos. And keep in mind when I send them out, when the market's moving, usually I wait. If it's not time sensitive, like an end-of-day market wrap, I'll wait till the video is processed at YouTube. But if I fire it off as soon as they generate the thumbnail images, what happens is they're still processing the video behind the scenes. It'll play, but it only plays in 360p. That's not high def, so you're going to see a little bit blurrier charts. What you do there is just go down to the bottom. If you want to watch the video right away, that is. Start playing it, and then every now and then click that little settings icon that comes in the bottom right hand corner of the video, and at some point you should be able to flip to 720p HD, and sometimes that won't even work. If you started the video in 360, you just need to refresh the page or visit it on the YouTube channel and then keep checking the video quality. All right, we'll wrap it up here. This has been Randy Finney with the right side of the chart. Good luck on your trades.